Hello everyone. Today we are covering the topic of retirement of partnership firm. It is one of the topic from your 12th standard bookkeeping and accountancy. In this topic there is a subtopics like calculation of ratios, treatment of goodwill, journal entries of goodwill and so on. Sums are there, practical sums. But today's lecture is all about the treatment of goodwill. Treatment of goodwill, there are 5 cases. Case number 1, that is goodwill of the entire firm is raised and retained in the business. It is like the goodwill of all the firm. Goodwill of all the firm will be retained in the business after retiring of the partner. First of all, let me give you a hint of what is partnership firm. When 2 or more persons come together and share some common objective to achieve some common goal, it's called a partnership firm. Before this, we also learned that admission of partnership firm, in which partner will be admitted, a new partner will be admitted. But in this chapter, the name is retirement of partner. It means the from existing partner, one partner will be retired, and because of that partner, changes in goodwill will be there. There are 5 cases. There are 5 cases in treatment of goodwill. Number 1, when goodwill of the entire firm is raised and retained in the business. So the case number 1 basically tells you that the goodwill of the firm, of all the partners of goodwill, raised and retained in the business. So there will be a journal entry. Journal entry will be passed, goodwill account debit to all partners capital account. Goodwill account debit to all partners capital account, and this goodwill, the most important thing, that this goodwill will be shared according to their old profit sharing ratio. Because you see, in this case, a goodwill will be shared to all partners. It means the posting will be goodwill accounts debit to all partners capital account and all partners capital account credit to goodwill account. So there is an important note too. Goodwill will appear in new balance sheet because we raised a goodwill and retained in the business. That's why it is compulsory for goodwill that will be appear in the balance sheet. So first case, the goodwill of the entire firm raised and retained in the business, and the entry will be passed, goodwill account debit to all partners capital account. So this is the first case and the first treatment of goodwill in which we have learned the raised and retained in the business. Moving forward to the next treatment, that is the goodwill of the entire firm is raised and written off. The goodwill of the entire firm, raised and written off. You all know goodwill is an intangible asset. Goodwill is an intangible asset, and it cannot be seen and it cannot be touched. But in this case, goodwill of the entire firm is raised and then write off. It means the depreciation of goodwill. Write off means just like a depreciation of the goodwill. First, all partners will raise the goodwill. And then continuing partners depreciate the goodwill after the retirement of one partner. So there will be 2 journal entry passed in this case. First of all, goodwill is raised. Similar entry passed, goodwill account debit to all partners capital account, and it will be distributed according to the old profit sharing ratio. I am repeating, first of all, goodwill will be raised. So similar entry pass of first case, goodwill account debit to all partners capital account, and it will be distributed according to their old profit sharing ratio, because it includes all the partners, also including a retiring partner too. When goodwill is written off, when goodwill is depreciated, so the entry will be continuing partners capital account debit to goodwill account. Continuing partners, after retirement of one partner, the remaining partner, that is continuing partners who will run the business in the future, that's the continuing partners capital account debit to goodwill account. The most important point is here, goodwill will be shown in credit side of partners capital account, because goodwill is an asset and it will be fruitful for all the partners if it is raised or if it is retained in the business. But if in case of write-off, it means a depreciation means a loss. That's why in this second case, goodwill will be shown in the partners capital debit account, because in some time goodwill will be shown in debit side of partners capital account, and that's why partners bearing a loss of 2, because it depreciate or it write off the goodwill. So this is the second case of the goodwill. Moving forward to the third one. Yeah, there is some important note that goodwill will not appear in the new balance sheet. Sir, why? Why in this case goodwill will not be appear in the new balance sheet? Because goodwill completely writes off and goodwill completely depreciate, and you have no goodwill. So that's why this will not be appeared in the balance sheet. When goodwill is raised to the extent of retiring partner and retained in the business. In this case, a goodwill will only be raised for the retiring partner who is retiring from the firm, and raised for only that, and also retained in the business. The entry will be passed goodwill account debit to retiring partners capital account. Goodwill will appear in the new balance sheet to that extent. It means if you are retaining because of the retiring partner or all for all the partners, goodwill will must appear in the balance sheet. So these are the 3 cases of the goodwill which I taught you in this lecture. So in upcoming lecture, remaining 2 treatment will also be explained to you of the goodwill. Thank you.